So the Ultimate Premium Trading Guide, this is how I termed the introduction. I welcome you to the Beauty Forex's catalyst to trading for financial success. Okay, so we shall be looking at basically what Forex trading is. We shall have to look at the terminologies, the words we use, because we need to understand the terms. We need to understand what these words mean. Okay, so welcome to our mentorship. So the Vito Forex Ultimate Trading Guide is here to unlock your trading success with this premium course that covers right from beginning traders to advanced traders. So our traders we categorize traders according to their level of knowledge. We have the beginners, we have the advanced, and we also have the intermediates. So we cover right from beginning traders, people who are just starting their Forex trading businesses, who want to explore what Forex trading is, to the real people who understand but they're still having challenges somewhere. So we go ahead to say that you're going to gain exclusive trading power. You need to gain great insights and also expert knowledge to navigate the markets and embark on a transformative journey towards financial excellence. Like we had talked yesterday, this is something that can grant you financial success at the same time financial freedom. It can push you ahead of time within a very short period of time. Okay, so once you handle it very well, this is something that has great power. So we help you elevate your trading. If I told you an intermediate or if I told you an advanced, so that will help you pave the way to a prosperous future. You have to get ready to revolutionize your approach to trading and embrace the power to strategy. Vito Forex is a trading brand that is aimed at providing a dynamic and visionary approach to Forex trading and is suitable for beginners, intermediates, as well as advanced traders. We specialize in offering a comprehensive trading guide and a system to enable traders keep up to speed in the ever-changing Forex market. Vito Forex offers numerous services which include providing real-time signals. We shall see what signals are, market analysis, consultation, traders community, and mentorships. Our mission is to provide quality and reliable services to our clients and also to provide timely and supportive assistance to our traders. So up to this point, we have a trading community where we are trying to gather our traders we have dealt with so that we have a common area where we interact and share this great knowledge. In this module 1, these are the things we shall be looking at. 1, introduction to Forex trading. 2, the basics of Forex trading. 3, currency pairs. 4, common trading terminologies. PIP and lot calculations. We shall see them, don't worry. How to open up a trading account and navigate to the platform. 7, market participants. So we shall get to see each and everything in this module. Okay. Introduction to Forex trading. What is Forex trading? Forex trading is basically the buying and selling of foreign exchange currencies. I'll give you an example. You have Ugandan shillings with you. Supposing you have 1 million Ugandan shillings, and you want to exchange the Ugandan shillings for the US dollar. You go to the Forex Bureau with the shillings and exchange to get the US dollar. That is Forex trading. Although what you're doing basically is you're going to the counter. Okay, you're going to the counter, and in this case it's the Forex Bureau. You're going to a person to give you the US dollars in exchange for the Ugandan shillings. Well, for us, what we do is basically ours is entirely on a network, and a network that is decentralized. You don't have a physical location that you'll have to go to this place. Now we have a network, okay, where we trade against each other. So basically, Forex trading is the buying and selling of foreign exchange currency. To have a network that helps us trade. You have the the US dollar, but you want the British pound, someone is there willingly to sell to you the British pound and acquire the US dollar, like that. So we shall get to appreciate in the future what the Forex market is and understand how this thing is done. Okay, so the Forex market is the biggest financial market. It's the biggest financial institution in the world, whereby we have over right now it's over $7 trillion traded each and every day in terms of volume. So this is how big the Forex market is. Furthermore, we trade 5 days a week, and this corresponds to the working period of our participants. Okay, if at all you're trading Forex, it will be 5 days a week. However, trading is so large, we have so many tradable assets. We have people trading cryptocurrencies, and these ones, even the weekends, for them they are in business. Okay, we have people trading indices. The term indices is just these are assets which measure how economies are performing. For example, we have indices that measure how the US economy is performing. We have indices that measure how the British economy is performing, how the German economy is performing. So indices are just a measure of how economies are performing. We can also work over the weekends. We have people trading futures. They can also work over the weekend. We have people trading stocks. Okay, they can also work over the weekend. So we working 5 days a week means we have a maximum of 20 trading days a month. Okay, 20 trading days a month. So the Forex market opens on Sunday midnight and closes on Friday midnight. Okay. However, our trading just shifts across the different time zones. So as the London is closing, the New York is opening. As the New York is closing, the Australian is opening, like that. Like we shall see how we come up with these time zones. Okay, so the Forex trading day already starts from Sydney, Australia, then to Tokyo, Japan, then to London, then to New York, back to the Sydney, Australia, like that. So we move in time zones. Reason being, the currencies that we measure in the 8 major currencies that we trade have to be catered for. You know, these countries that provide the currency pairs, you know, the currencies, we have to take part in their economies. So this means that if at all you're trading the Japanese yen, basically you're taking part in the Japanese economy. Okay, so we have to take part in the economies of those countries that provide us the 8 major currencies around. Okay, so this means that if at all we are trading the Japanese currency, we have to take part in the Japanese economy. That's why we have to incorporate their time zone. So this takes us back to what we've said. The Forex market is a 24-hour market. Reason being, at the point when the Japanese economy is active, the US economy is not. At the point when the US economy is active, the Japanese economy is not. So this brings us to a constantly open market across the 24 hours of the day. Okay, so that's why we have the 24 hours. Now these are the 8 major currencies, and the 8 major currencies. From the 8 major currencies, that's when we get the major currency pairs. Now the countries you're seeing here are the providers of the major currencies. 1, we have the US, which provides us with the US dollar. 2, we have the Great Britain, which provides us with the Great British Pound. We have the Canadian dollar from Canada. We have the Swiss franc, which is the Switzerland currency. We have the Australian dollar. we have the New Zealand dollar, we have the Japanese yen, and also the euro, which incorporates all the European countries at large. So these are the currencies that we term as major currencies. Okay, so these are the nations that, or these are the currencies that we term major currencies. 8 major currencies, we get what we call the 7 major currency pairs. Now, currency pairs, these are now all about US dollar, Ugandan shilling. That's what we term as a currency pair. Okay, now all about British pound, US dollar. That is what we term a currency pair. So we get to pair these major currencies to come up with currency pairs. So currency pairs are one of the traded assets we have in forex trading. Okay, when you're dealing with foreign exchange. Okay, so these are the assets. So this is what we trade. We trade GBP USD, we trade Euro USD, we trade USD Japanese yen. Okay, and the way these currency pairs are aligned is dependent on the relative value of the base currency to the quote currency. We shall see what the base currency and quote currency is. So we tend to pair them accordingly. We don't just pair anyhow. So usually the strongest currency is what comes first, then the weakest currency is what comes next. So the nomenclature is not anyhow. Okay, you can't find USD GBP. That one is not there. Rather, it is GBP USD. Reason being, the relative value of GBP is high compared to that of the USD. Okay, you will never find USD Euro. No, it is Euro USD. Okay, you will never find USD. You never find USD Australian dollar. Reason being, the Australian dollar is way greater than the US dollar. So the major currency pairs, minor currency pairs, and exotic currency pairs. Now, what are major currency pairs? Major currency pairs are the pairs that contain the US dollar, Japanese yen, Canadian dollar, New Zealand dollar, Australian dollar, and the Swiss franc. Okay, now these are the most tradable currency pairs across the globe. The 8 major currencies, these 8, you exclude USD. Now you pair the remaining amongst each other. Okay, GBP Euro, you pair these remaining against themselves. New Zealand dollar, Japanese yen, GBP, Japanese yen, such things. Okay, so we exclude the US dollar to come up with minor currency pairs. Remember, we said major currency pairs is where we pair these ones with the US dollar. When it comes to minor currencies, we exclude the US dollar from the picture, then we pair these ones amongst themselves. I'll give you an example. We have the Euro GBP, we have the Euro Canadian dollar, British pound, Japanese yen, Euro Swiss franc, Euro Japanese yen. Now you can see that the other European countries are not involved except Switzerland and Britain. Reason being, Switzerland is one of the it's the country with the most federal reserves, or with the most financial reserves in the world. That's why we have to involve it. In Switzerland, but most of the organizations, most of the unions have their headquarters in Switzerland. The World Bank is one of the strongest world banks is in Switzerland, such things. So you won't see Germany. You won't see Italy here. So these German Italies are categorized under Euro, Euro currency. Okay. So we have exotic pairs. Now, exotic pairs is where we pair the US dollar with any other pair in the world. US dollar, Ugandan shilling, US dollar, Brazilian real, US dollar, Indian rupee, and so on. US dollar, Kenyan shilling, and so on. Those are the exotic pairs. Okay, now having looked at pairs, I don't know whether we are together up to that point.
Yeah.
Okay, let's look at what we call the forex market size and liquidity. The forex market size and liquidity. Here we are going to disseminate and look at the different categories of the forex market. Okay. Now, the bulk of forex trading takes place on what we call the interbank market. Like we said, we have a network that brings us together, and it's called the interbank market. However, this network has levels. Tosobola kuva wano nawe n'ogamba nti you want to trade with the big boys. Kati mulimu levels. Waliwo level esooka ey'abanene, like we shall see the different levels. The level of central banks is also there. The level of commercial banks is also there. The level of companies, MTN, Airtel is also there, and the level of us is also there. So we shall see what this interbank market is. Okay. Unlike other financial markets like the New York Securities Exchange. Now, with the New York Securities Exchange, this is a very you can go ahead and search about it. This is a big it's a big financial institution. Yeah, New York Securities Exchange, London. They're big financial institutions. Okay. Unlike other financial markets like the New York Securities Exchange or the New York Stock Exchange, okay, London Stock Exchange, the forex market has neither a physical location or a central exchange. Like I said, for us, we don't have a common place where we go to transact. No, we have a network. Okay, what we termed as the interbank market. So we have a network that brings us together. The forex market is considered an OTC, over-the-counter market, due to the fact that the entire market is run electronically within a network of banks to non-bank financial institutions. Okay, for us, we have now a network that brings us together, and you won't have access to that network unless you have partnered with someone who can grant you access. So we shall see how we get access to also take part in the forex market. Okay, in an OTC, over-the-counter market, participants can be picky and can determine who they want to trade with depending on trading conditions, 1, attractiveness of prices, 2, and reputation of the trading counterparty. Now, we get to choose what according to this, I want a buyer, aina this. Okay, so we get to choose. Then we shall see what we make. Now, OTC markets are grouped into primary OTC markets, primary over-the-counter markets, and secondary over-the-counter markets. Now, what are primary over-the-counter markets? Primary OTC markets. Now, this is considered the birthplace of securities. This is where companies, firms sell or float new stocks and bonds to public investors for the first time in order to raise capital. So we call this initial public offering. Now, this is what happens. I will give you an example here in Uganda. When the government wants to issue out its securities, it goes to these institutions, what we call the primary markets, in order to sell those bonds or issue them to the investors at the level of the primary markets. Okay, that is example number 1. Example number 2, when MTN, Airtel, or any other company is going to be selling shares, they first go to the primary markets and list the shares they are selling. Then the investors in the primary markets purchase those shares. Then bana bapurchasinze shares zinina the primary market share purchasers or the primary market share investors then come and sell those shares to the secondary market. So this is what happens. Okay, so we call that initial public offering. The transactions that happen at the primary markets directly happen between the issuer and the investors. The transactions that are going to happen here zibeera wakati wa Airtel ne ba investor bagenda okugula shares ezo initially, what we call the initial public offering. So kati bano abantu when they advertise simanyi Airtel etunda emigabo, it is these investors from the primary markets that sell those markets now to the secondary market participants. I don't know whether that is clear. So participants in the primary market include the issuing company, underwriters, institutional investors, okay, which two. So we've seen primary markets, primary OTC markets. This is where these companies do what we call the initial public offering. You can go ahead and search about what we call the initial public offering and you can understand it better. Now, we have secondary OTC markets. Now, secondary OTC markets, this is where they buy equities from primary investors. These people who have purchased these shares, these bonds from the initial public offering. Okay, so they come and sell them now to the primary investors. Now, these include the New York Securities Exchange, or the New York Stock Exchange, Uganda Securities Exchange, or Uganda Stock Exchange, Kenya Bichi. So these are examples of secondary markets. This is where we buy equities from the primary market investors. Okay. Now, the secondary OTC market involves the trading of existing securities among investors. Like we said, it's the primary investors now that sell to us these securities. Okay. Now, these securities, I'm going to come into they are from the primary markets. We now come and trade them. We now come and buy them from the primary investors. Now, this is grouped into two. Secondary markets are grouped into two. One, we have the auction market and the dealer market. Okay. Now, the auction market, this is where participants meet in one area and trade securities. Okay. It's in these markets, the auction markets, where prices are announced on which they are to be bought or sold. Okay. Tulina kye dealer markets. Here, participants connect with each other electronically. I will give you an example of the auction market and dealer market. Now, the auction market, when you want to buy Airtel shares, you have to go waliwo listed Airtel share gwe bazitundira. Okay, that is what we call the auction market. For you to be able to purchase those securities from the secondary markets, you have to go bagamba nti oba tujja kuba tugenda wano okugula shares, oba we shall be going to such and such a place to purchase these treasury bills or to purchase these bonds. Okay, so this is what we mean. Okay, so dealer market, here we don't need now to meet up anywhere. Ours is typically electronic. For example, Forex trading, ours is typically electronic. We don't need to congregate anywhere for us to come up with transactions. So we being able to take part in this market, we must get access. Right now we don't have access to the interbank market. You must get access to the network, okay, so that you're able to trade. So we are granted access by people we call the brokers. Okay, tujja kulaba ba brokers n'engeri dynamics zaabwe engeri gye zikulamu bibadde mpolampola. So we said the dealer market, here participants connect with each other electronically and don't need to meet up in one place. Auction market, you have to go somewhere to purchase the shares. You have to go somewhere to purchase the bonds. You have to go somewhere to purchase those listed securities from the secondary markets. Okay, basically that is we have just a chart here to show us the percentage of how these currencies are traded. So we have the US dollar, which is the most traded currency, like how it is. The US dollar is one of the currencies that is used to conclude transactions in the world. Okay, so it's one of the most traded currency, and it makes up 84% of all the total transactions that occur. The euro is the second with a 39.1. Then the Japanese yen comes up with a 19.0. Now these statistics are not so accurate, but this is how these currencies are traded in their order. The US dollar is the first, then the euro second, Japanese yen the third, katao. British pound in Erokedako. Okay. As you can see, this pie chart, it shows us that the US dollar comprises roughly 62% of the total foreign exchange reserves in the world. It's the largest. Then Nekudako GBP Nedako is one of the currencies that people tend to purchase in order to keep. Okay. Nekudako Japanese yen, nekudako euro, abalala ne baddako. Bwe batyo episode ya leero to begins the introduction part. Probably we've I don't know whether we've understood something from it. So here we basically were talking about what the Forex market is, the currencies we deal with. Okay, like we said, we have very many tradable assets. We have currency pairs, we have commodities, we have indices, we have cryptocurrencies. Okay. Now cryptocurrencies, people are trying to get alternatives to cash money, and they have developed crypto coins or cryptocurrencies. In the previous days, we had gold as our medium of currency exchange, but now we left the gold transaction period to the monetary currency. Now people are trying to create a way of exiting the monetary currencies, and they are developing those digital currencies. So there are very many tradable assets, we shall see, and currency pairs are one of them. For at least we are very sure currencies are still with us for some time. Okay? Currencies are still with us for some time. So this is the end of our first episode, the introduction part. Hope it has been helpful in one way or the other.